Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, the market is open and as expected, market is behaving like a typical Monday market. There is not much volatility, there is not much volume. Market is more or less waiting for a big move. And usually during the first half of Monday, we don't get to see much volatility, especially during the Asian session. And we can see the market has opened on a lower note. DXY is trading around 105.60. Gold is standing at 1922.67. So if you're looking for detailed analysis, then please watch the video that I uploaded on Saturday, because I do not want to repeat the same stuff and bore you again. Okay, because there is not much significant change on the chart. The levels that we discussed on Saturday are still very much valid. You can see gold consolidates amid mixed signals. Gold consolidates in the morning Asian session amid mixed signals. On one hand, Fed Chair Powell delivered a hawkish surprise, reiterating the higher for longer narrative, which has been the worst fear for gold. On the other hand, physical markets have been strong, underlining resilience for the precious metals prices against a recent climb in the US Treasury yields. So there is a mixed signal going on the chart of gold. So in this type of market situation, we can expect the market to remain sideways, market to remain choppy for the next couple of days. So if you look at the chart of DXY, then there is no doubt that the US dollar index is bullish, and we can expect that the dollar will continue the uptrend. For the last couple of days, DXY is also losing momentum. So there may be some consolidation by today evening, especially during the US session, or by tomorrow. But that doesn't mean that we will be having a trend reversal. Trend reversal is a different thing. We need a big fundamental factor. We need a big news that will push DXY to the downside. In absence of any fundamental factor, we can simply expect that DXY will remain sideways, or it will just come for consolidation. To continue the upside, DXY will have to cross 106 level. Okay, now let's look at the chart of gold then. So as I said, the levels from Saturday videos are still very much valid. So my dear friends, the first level was around 1922. Yes, we discussed about 1922, that if the volatility of the market is low, we have a weak or minor support around 1922 level, and we can see that market is also already getting the support we were waiting for. So if you already have taken a buy position, you can be on the trade. Just put your stop loss around 1919, 1920 level. And if you have not initiated any buy position, you can wait for the European session, because just after a few hours, okay, European session will start. So you can wait for the European session. If market bounces from here, if you see market taking support, you can go for a buy position. And during the European session, if market drops, let's say market starts falling with candles like this, not much volatility, but normal candles, okay, it means that market has volume. In that case, you can expect the market to take support around 1915. Okay, 1915. It can be 1914 to 1916. Okay, around 1915, around this level here, we can expect the market to take support. Though the market will be in downtrend, but as the volatility of the market is not very high, selling pressure is not very strong, we can expect that market will take some support around this area here. And the next support is around 1911 level. So we have multiple supports on the chart of gold right now, and the volatility of the market will be decisive. So the first support is around 1922 level. 1922 is a weak support. So if you see market taking support by the European session, you can go for a buy. If you already have taken a buy position, you can be on the trade, because in this volatility, okay, there should be some sort of bounce. If not a big bounce, at least you can expect a bounce of 25 to 30 pips from 1922 level. The second support is around 1915 level, 1915, 1914 level. And if market drops, if market breaks 1922, obviously we should not be surprised, because 1922 is a weak level, and 1915, 1914 will come into the scene. If market bounces, we can go for a buy. And then 1911 level we derive from the Fibonacci 78.6% retracement level, and the previous resistance will also be acting as support. From the 1911 level, if not a complete bounce, trend reversal, at least we can expect a temporary bounce of 40 pips. Okay, so these are the levels, and 1900 to 1903 level as the strongest support is still very much present on the chart, but I don't think so market will be heading towards 1900 1903 level as of now. So yes, it is present, but will not play a major role right now because market is trading in this particular portion here. And just like the 1900 1903 as the strongest support, 1950 and 1960, these are the strongest resistances on the chart of gold. But the same problem, the levels are far away from the current market price because market is standing here. So if market shows upside, we can expect 1935 to act as the next immediate resistance. In fact, in a previous video also we have discussed about 1935 1934 level. Around 1935 1934 level we have FIBO 61.8% retracement level, and the previous resistance will also be acting as the new support here. 1930, you can see that yes, 1930 is also present, but market has already tested 1930 couple of times. So as a result, there is a possibility of some stop loss hunting around 1930-31. So 1934-35 seems to be a better level to initiate a sell position. And the strongest resistance obviously is around 1950, but you can see 1947, 1948 can also be a level of reversal. So as the market is choppy, obviously market will not be going for a particular direction. If you are expecting that Avilas will tell about a particular direction, okay, then it is not possible. Okay, we are traders, we need to be flexible, we need to behave according to the market behavior. This is not a trending market. You can clearly see this is a sideways market. So as a trader, you need to adjust your trading style according to the market behavior. So in this situation, taking trades on level is the best thing to do, because in trending market things are quite simple. Once you enter, let's say you have taken a buy position, you can simply sit with the buy position as long as you sense any trend reversal sign. But in this market situation, you need to be cautious. You cannot expect the trend of the market to continue for 2 days, 3 days. So for safety purpose, try to trade on levels only, because this is not a trending market. If a news comes out during the week, then obviously we will get to see a different picture. But as of now, be flexible and trade from level to level only. Okay. If market comes down, try to look for a buy position at the support levels, and if you see the market is going up, then try to look for a sell position. As I always say, volatility of the market will be very, very important, because the volatility of the market is the play a key role. Okay, because so that's all from us, sir, my dear friends. Let's wait for the market to give us a proper move in the